Welcome back to the Gleaners Corporate Coffee Mornings. My guest is Mrs. Rita Humphries Lewin from Barita. Barita is about to put on the market two new instruments. And we were talking about the two instruments, Mrs. Lewin. Can you explain some more about the foreign exchange one, which you said most people would be interested in?
Yes, the reason for that is the natural devaluation of the dollar.
Yes.
And so people are trying to hedge against that.
Mm-hmm.
And the concern about the interest rates moving at the rate at which they're moving. And a lot of people are trying to, and this is why the dollar is sliding so heavily.
Now, are the monies earned, are they taxed on these two instruments?
Yes, no, on some of them, some of the instruments. Everything is, well, not all the instruments are subject to tax,
Right.
but some are subject to tax.
And what about minimum amounts that somebody can buy?
A minimum amount for, normally we put it at $100, then the price will change that.
That's $100 US.
100 US dollars.
Yes.
And 100 units.
100 units.
Yes, you're limited to 100 units.
Okay.
And the price of the, and it stays like that for almost forever.
And what is the price of one
Well,
unit?
we're going to start hopefully at $1 because it's a new fund, And so we are encouraging, but we also are asking for at least $1,000 to start.
Yes.
Because I think that's a reasonable amount to
Right,
start.
if you're serious about saving some money.
The 100, because it's a trust deed that dictates everything.
Yes.
And while we have the 100 units, we need to understand that that is going forward. So in other words, when it gets like to $10, the 100 units still applies.
And the Jamaica Income Portfolio Fund, how much of that do you have to buy?
That one I think is 1,000 units.
Okay.
And that is specifically for people who want to take interest out. Now remember, we have two other funds.
Yes.
We already have the money market fund,
Right.
which has done extremely well.
Yes.
And we have a capital growth fund, which invests in the stock market.
Yes.
So these are two additional funds, and then we're going to be coming with more. And that will continue to increase because we're looking at a real estate fund and we're looking at a U.S. equity fund.
Okay.
We're looking at several other things.
Right.
Because, in fact, I think the government wants us to get out of the repo market and go into more other instruments that are really more contributive to the country.
I see.
Right? In that you can raise financing for various things.
Are you going to have a time limit on when someone can cash in on these funds? No.
Oh yes, you have a notice time,
Yes.
And as I say, all these funds are controlled by a trustee.
Mm-hmm.
And let me explain that to you. The trustee is the owner of the assets for the clients. We are not the owners. And they are protected. And I always use Eagle Unit Trust as an example, that when the bank went under and the government took over, they couldn't touch that fund. It is so protected. All funds are that way are protected. And this is why we like to promote it. Because we feel that if Barita goes out of business, that stands.
I see.
They don't go with us. Okay. And CIBC is our trustee.
Yes.
And CIBC, if they fail to, they can't touch that fund. Neither can the government touch it.
Oh, excellent.
Mm-hmm. They can do things to it, like tax it and apply penalties and things like that, but they can't touch the capital.
So the potential client can go to bed and know that
that's right.
Their money is secure.
That's right. That Barita doesn't have it, neither does FCIB. It is they are the trustees and the custodian of all the funds for us, for Barita. And to me, I think that, you can go, you're right, you can go to bed and say, well, even if I've lost a little money, my assets are not threatened.